Hello everyone, my name is Ganesh Tahal and my group members Jackson Baral and the Sair Mia. Today our group will be presenting our business 104 assessment 1 on investment risk and return analysis. We had compared the two assets which are WTI crude oil and Bitcoin using their daily returns throughout the entire year of 2019. So let's start with the assessment context. So to set the scene, we are playing the role of a senior-based investment consultancy team, and we have been asked by senior management to compare two very different types of assets, which are WTI crude oil and the Bitcoin. WTI crude oil is a physical commodity traded globally, driven by energy markets, supply and demand, and geopolitical factors. Whereas Bitcoin is a digital decentralized cryptocurrency driven largely by market sentiment, speculation, and investor behavior. Now, how we are measuring risk? We are measuring it through volatility, especially how much the daily returns vary and fluctuate over time. The more a return swings up and down, the riskier the asset. For measuring returns, we are using two key time series measures, the average daily return mean and the median daily return. Our dataset is clean and well structured. We have 252 daily observations for each asset, one for each every trading day in 2019. Both are measured in percentage returns, not prices, which is important because it puts both assets on the exact same scale, making a direct comparison fair and meaningful. Our final output is an evidence-based recommendation built entirely on Excel analysis. So let's go to the slide 3, aim and method. Our aim is straightforward: to compare the risk return profiles of WTI crude oil and Bitcoin using real 2019 data. One thing to be clear about from the start: we are not forecasting future prices. This is purely historical, descriptive analysis of what actually happened in 2019. Our data is expressed as percentage daily returns, not raw prices, because the returns allows us to compare two assets that operate on completely different price scales. We used four main analytical methods: descriptive statistics to summarize the data numerically, line graphs to visualize the return patterns over time, normal probability analysis to estimate the likelihood of certain outcomes. The specific statistics measures we calculate are mean, median, standard deviation, variance, range, and skewness, all computed in Excel. So let's head to the slide 4, daily return series. Before we even look at a single number, I want you to look at this chart carefully. This is a line graph showing the daily percentage returns of both WTI crude oil and Bitcoin across all 252 trading days in 2019. Look at Bitcoin's line. It is constantly spiking up and down, with several dramatic peaks and troughs. On same days, Bitcoin gained or lost close to 10% in a single day. This is enormous movement for any asset. Now, look at WTI crude oil. No investment is perfectly flat, but the swings are noticeably smaller and more combined. Its worst days were around a minus 4.5% loss, and its best days reached about plus 3%. This chart gives us our first and most intuitive signal: Bitcoin is far more volatile than WTI crude oil. What you see visually here is exactly what the numbers will confirm in the next slides. Keep this image in mind as we move through the data. Now let's head to the slide 5, descriptive statistics summary. Now let us look at the number in detail. This table summarizes every key statistics for both assets. Mean daily return. Bitcoin's mean return of 0.299% per day is higher than the WTI 0.125% on the surface. Bitcoin looks like the best performer. Median daily returns. But here is where it gets interesting. WTI median return is 0.290%, which is actually higher than Bitcoin's median of just 0.106%. The median tells us what a typical day looks like, and on a typical day, WTI actually outperformed Bitcoin. We'll explain why the mean and median tell us different stories in the next slide. Standard definition. This is the core measure of risk. WTI standard definition is 1.494%, while Bitcoin is 3.477%. That is more than double the volatility. Variance. WTI's variance is 2.232, but Bitcoin's is 12.087. That means Bitcoin's variance is more than 5 times greater than WTI's. This is a critical finding. Minimum and maximum. WTI's worst day was minus 4.45% and its best was plus 3.07%. Whereas Bitcoin worst day was minus 8.02% and its best was plus 9.58%. Bitcoin had both bigger wins and bigger losses. Range. WTI's range is 7.52 percentage points. Bitcoin's range is 17.59 percentage points, more than twice as wide. A wider range means more unpredictability. Skewness. WTI's skewness is minus 0.555, meaning it is slightly left skewed. It has a slight tendency toward negative days, whereas Bitcoin's skewness is plus 0.283, slightly right skewed. It means is being pulled by some very large positive days. IQR. WTI's IQR is 2.139% versus Bitcoin 4.343%. This confirms that even in the middle 15% of days, ignoring the extremes, Bitcoin is still roughly twice as variable. As a summarize, Bitcoin offers slightly higher average returns, but it comes with dramatically higher risk across every single measure: standard deviation, variance, range, and IQR.
So let's move to the slide number 6. So let's look at the central tendency of both the investment, as we have two investment, that is Bitcoin and the WTI crude oil. So as we can see, for the mean or average daily return, Bitcoin performed 0.299%, while the WTI crude oil has only the average return of 0.125%, which shows that Bitcoin's higher average was influenced by very few very large positive returns. But looking at the average return is not all about the things while investing in such large numbers. So we must know about the risk and the consistency. So let's move forward to the slide number 7. So let's examine the variability and volatility. So it is the important measure while investing. So as we can see, the standard deviation of crude oil is 1.494%, while Bitcoin has a much greater number, which is 3.477%. So as we can see, Bitcoin has a higher number of variance than the WTI variance. But in additionally, we can see Bitcoin return range was 17.59% as compared to 7.52% than the WTI, which means that the Bitcoin experienced more large price movement, but it also significantly carries the higher risk while investing, while the WTI crude oil showed more stable and predictable performances. So as we move forward to the slide number 8, let's look to the probability analysis of this WTI crude oil. So the probability of earning a return of greater than 10% is almost zero. Like the probability of a negative return is approximately 47.34%, which means that there may be some kind of losses on the trading coming days. So these results support that the WTI has some kind of stable investment opinion due to its lower volatility and more predictable returning patterns. So as we move forward to the slide number 9, we can see the relationship between the Bitcoin and the WTI crude oil. So this means that these both of them are influenced by the different market factors. So as we can see, Bitcoin is largely influenced by these investor, but as we can see, the WTI crude oil is mainly affected by its energy, the demand, the supply, and the different kind of geopolitical events. So as we can see, the based on our analysis, WTI crude oil is preferred a good investment for the management as it provide lower risk, lower volatility. So Bitcoin still may be considered a secondary investment, but our priority is the WTI crude oil. So as the conclusion, let's move to the slide number 10. So as we can see, the both assets have their own pros and cons. So as we can see, Bitcoin generated a higher average return during the 2019, but it also showed that it has higher volatility and risk, while the WTI crude oil has low variance, the lower range and lower median return, indicating a greater stability. As we can see, its stability. So for risk aware management, I think the WTI crude oil is a better investment choice for many peoples, and Bitcoin can still be one of the greatest investment, but it has high potential risk, but also has a high returning opportunity in the coming days. So thank you for listening. So if you are going to question anything, we're ready to take any question. So let's by looking at this all presentation. So as you can see, the Bitcoin offers higher potential return, meanwhile the WTI crude oil provide better balance between risk and return, making it a good and recommended investment.